Hello friends, welcome back to another video. Today I want to discuss about SOFI Technologies, ticker symbol SOFI, a stock that I had previously covered on this channel back in November 2021. Back then, I had mentioned that I liked SOFI's business model but would prefer to average in over time as I thought the stock was overvalued at around $20. Since then, as the market has been very bearish in the last few months, almost every unprofitable growth stock has crashed over 50% from their highs, and SOFI is no exception. In fact, SOFI has crashed almost 65% from their all-time high of $28, now trading at just $9.87 at the time of recording this video. I have been adding to my position over time and have managed to bring my average cost to $11.70 and plan to add more if the stock price goes below the $8 range again in the short term. Even though I'm pretty bullish on SOFI's long-term prospects, let's discuss where we are at from a fundamental standpoint and also some of the reasons due to which the stock has been facing consistent downward pressure in the last few months. So let's first look at SOFI's 2021 Q4 earnings presentation to review some of the key metrics and business fundamentals. As you can see here, revenues for Q4 2021 came in at $280 million, up 54% year over year, and the adjusted EBITDA for the quarter was $5 million. It is good to see the revenue still growing strongly year over year, but quarter over quarter the numbers are just flat when we compare Q3 against Q4. I'm not sure if this is just seasonal, as I couldn't find any specific reason for this in the management commentary. Anyways, I'm not too worried about this, as the Q4 revenues were still at the higher end of the guidance that the management had provided during earlier quarters. Looking at the annual metrics also, we can see that SOFI had an exceptional 2021 with over $1 billion in revenue and a positive adjusted EBITDA of $30 million, both numbers exceeding the guidance that management had provided earlier. As for the guidance for Q1 2022, SOFI expects to bring in revenue of around $280 million, which will be 30% higher than Q1 2021, but again flat when compared to the previous quarter. So I feel there is certainly some negative catalyst that may be slowing down the revenue growth, including the impact from the extension of the student loan payments as quoted here by the management. However, the revenue growth is expected to recover sometime in 2022, as the management is guiding for over $1.5 billion in revenues for the full year, as well as a much improved EBITDA margin of 11% or $180 million compared to the $30 million earned in 2021. In terms of members, SOFI serves over 3.4 million members as of Q4 2021, and the year-over-year growth is at 87%, which is very impressive. As you can see here, the company has been able to consistently grow their member count in the last few years, as they continue to take market share by introducing innovative and cheaper financial products. On top of this, their recent acquisition Valuation Technologies also continues to grow their member base at an impressive pace, and currently caters to 100 million accounts as of Q4 2021. Basically, Galileo has a well-established business model with clients across the globe, and I think this is going to be a huge catalyst for SOFI in the coming years. Earlier this year, SOFI also received regulatory approval to become a national bank, and this will allow SOFI to lend at more competitive interest rates, which should reflect positively on their revenues and profits over time. Now, before we get into valuations, let's discuss why the stock price has been going down even when the company has been publishing outstanding results in the last few quarters. Obviously, the macro environment is currently not favorable for growth stocks, but SOFI has also been one of the largest losers in this category. One of the reasons for this underperformance is the stock dilution caused by recent acquisitions and high stock-based compensation costs. As you can see here, SOFI's stock-based compensation is over 20% of the revenues, and the market doesn't like this as it is too high, especially as the company is a long way from being profitable. Even for 2022, the projected stock-based compensation is at $340 million compared to $239 million that was incurred for 2021. I think this number would trend down significantly in the coming years as SOFI's business operations become more mature, but certainly we have to be watchful of this metric as it will continue to weigh down the stock price if management doesn't do a good job of optimizing this cost over time. Another reason for the weakness in the stock price is a student loan payment relief that the government had announced last year. This has effectively eliminated one of SOFI's revenue streams until these payments are expected to resume starting May 2022. On a positive note, it It is very impressive that the company still managed to continue growing revenues in spite of this setback, so I think this is just a short-term issue and I am not too concerned about this. Overall, I think all these issues are of short to medium-term nature and SOFI's long-term fundamentals are still very much intact. So as long as the management continues to grow revenues and improve their margins while keeping a tab on expenses, we can expect the stock to do very well over the next 5 to 10 years. On this note, let's now discuss valuation by reviewing some scenarios to try and evaluate what we can expect over the next 5 years. So as you can see here, I have laid out 3 scenarios with varying revenue growth rates and net margins. Based on this, the stock price can reach around $17 at the end of 2026 if scenario 2 plays out, or $30 around scenario 3, and the risk of downside should be fairly minimal even if scenario 1 plays out over the next 5 years. Of course, the stock price can fluctuate much higher or lower due to market sentiment, so we should be prepared to re-evaluate our position from time to time when such fluctuations happen to take advantage of any overly bullish or bearish situations in the market. Personally, I continue to be very bullish about SOFI, especially as the stock price has come down so much in the recent months, and I'll be looking to add more shares if the stock price goes lower, unless I see any fundamental roadblocks to their long-term growth and profitability prospects. Let me know in the comments your thoughts on SOFI stock, and if you like this video, I'll really appreciate if you can leave a like and subscribe to my channel. And as a friendly reminder, I'm not a licensed investment advisor, so always do your own research before making any investment decisions. That's it for now. You have a great day and I'll see you in the next video.